Yes, today, everybody, I wanted to just go over perhaps a not so explored opportunity for investment within the property market. It's starting to gain a little bit of traction now. People are starting to wake up to the idea, but I don't think it's still don't think it's very a widespread idea. So I think it's worth exploring. Some of the people that know me from other networking groups may have seen this presentation already, but it's never hurts to have a little refresher anyway. I always think so. We'll get cracking on it today. So it's about furnished holiday lets. That's what we're looking at today, and the kind of drivers behind this is sort of twofold. We've got this what we might call flourishing staycation market now. We can see there some of the statistics. Domestic tourism accounts for 80% of all tourism activity. 72 billion spent by domestic tourists in England. Short breaks becoming more popular, rising 2% from 2018 to 2019, and obviously the COVID problem is making people think more about staying at home, less international flights, less people travelling abroad for their holidays, and more people thinking about staying in the UK. So that then creates an opportunity for a sort of holiday let type of investment. And there's also some benefits as well to look at this way of having a buy-to-let property. So it has a number of tax advantages over and above the standard let. Particularly when we talk about tax relief and other kind of reliefs you can get from a tax point of view, and that's where the attraction really sits, as well as it's another property that you can use yourself. Standard let, obviously someone's living in that, you can't just pop in and use it for a weekend. They'll likely complain if you do that. But if you have a holiday let, then obviously you can earmark some of those days for yourself in the calendar. If you wanted to use the property yourself as a little boat hole in the country or by the seaside, perhaps. And the other great thing about this, because it becomes more like a trading company rather than a building that you're investing in, profits count as earned income for pension purposes. So again, it builds in a little bit of tax efficiency for your future income. So there are some rules to how you qualify as a furnished let, and indeed it's possible to qualify 1 year and not qualify a second year. So it's something that's done on a rolling basis, but these are qualification rules. It must be based in the UK or in the European Economic Area, although I would steer away from that at the moment because my feeling is that those rules may be withdrawn as we come out of the transition period of Brexit. Although we haven't had confirmation of that yet, we don't know when that might happen. But I think a wise man might not invest abroad for this reason. Must be furnished. Business of furnished holiday let, and holiday makers must be allowed to use that furniture. So it's not good enough just to furnish and say, right, you can't touch the sofa. It's got to be a proper use. Must be available for letting for 210 days of the year, and must actually be let for 105. So half of those 210 days that must be actually let. So you need a 50% occupancy rate for that. No single let to be more than 31 consecutive days to the same person. So these must be short-term lets, a month or less. Lettings in excess of that period won't then count towards that 105-day period, and we'll have to go on top of that. You can let to family and friends on a non-commercial basis, but again, doesn't count towards your qualifying period, and therefore should not be occupied by long-term tenants for more than 155 days a year, because then it would encroach into your 210-day period. And it must be commercially let. It must be, the idea behind it must be that you're running it as a business for a profit. So the tax advantages with a holiday let, and there's a number of them. They stand apart from residential and commercial properties, rather than being buildings that you've invested in and you're getting a rent on. They're more considered to be a trading company. So you don't have to put it in a limited company, for example, but it's considered to be trading, and that can be done almost as a sole tradership, if you like. And all the costs are deducted before the net profit, including mortgage interest costs. This is in stark contrast to what's happened over the recent years with standard buy-to-let properties, where particularly for the higher and additional tax rate payers, they've been getting clobbered because they can only claim back 20% tax relief on the mortgage interest at the moment. So you can see there's attraction for the higher earners in this type of investment as well. You also get capital gains reliefs that you would only normally see given to traders. Entrepreneurs relief means that when we're looking at property, that the capital gains rate is not 18 or 28%, but rather 10%. And then you can also hold it over or roll it over, as you can as if you're a trading company. So that's very useful also. Expenses on furniture and other equipment can be adjusted against capital allowances for plant and machinery expenses. So again, that's another advantage that you don't get on standard lets. Losses in first year or first few years can be carried forward into the next year. So again, that mitigates your tax burden. If you hold, and this is a really interesting point, if you hold a furnished holiday let property in partnership with your partner, you are free to allocate the profits of that business between yourselves. That's irrespective of the shares that you hold in the property yourself. So you could hold the property as 50-50, joint tenancy or tenants in common, however you choose to own that property. But you could allocate the profits to be 75-25% in favour of the person who perhaps hasn't used all of their tax allowance this year, or maybe is on a lower tax banding. So you can sort of facilitate the profit share the way that best suits you for your tax position. The profits you earn from the furnished holiday let property is treated as relevant earnings, which then means that you can make large contributions to your pension pot, obviously, assuming that you haven't hit your limits already for the year. So again, you can get further income tax relief by topping up your pension with those profits as well. There are some considerations as well. Like all things, it's not all good news. So there are some key points you need to look at to make sure this is really an idea for you. So planning permissions, what we're starting to see with short-term holiday lets, many areas are not allowing those properties, or you have to apply to be able to have a short-term let. And those main ones are London and Edinburgh and Glasgow. And they won't allow properties that are rented for more than 90 days within a year as a furnished holiday let. They consider that to be what they call change of use. It's no longer a residential property. So they don't like it. And other cities, such as Liverpool, may follow suit. So it's always a good idea to analyse where the property is and if it's likely that planning permission is going to be needed. If the property is a leasehold, for example, if it's a flat rather than a house, you will need to check the terms of your lease agreement to make sure you're not prohibited from letting out on a short-term basis. Not only obviously is that breaking the terms of your lease, but you may find that you can't actually get a mortgage on that type of property if you're looking to purchase leasehold for the intention of holiday let. Or let's say you're already holding it as a standard buy-to-let property, and you think, oh, do you know what, I'm going to change that around, I'm going to make that a furnished holiday let. Again, you'd need to check your leasehold to make sure you're not breaking the conditions of your mortgage terms. VAT. So this comes down to turnover, of course. If your turnover is above 85,000, then you'll need to register for VAT as any business would. And also, you'll find instead of paying council tax, you'll be looking at business rates if you're letting for more than 140 days per year. You also need to register with the tax people, with HM Revenue and Customs, as soon as you start the business. Be up to you to obviously meet your deadlines in submitting assessments, or you can have an accountant provide that for you. And this is what we were talking about earlier. You may qualify as a furnished holiday let in 1 year. If you have a poor year the following year, then you'll then get hit with the tax bill as under standard models of buy-to-let. But to mitigate that, if you have a number of properties, a portfolio of furnished holiday lets, as long as you average between those properties the required number of days, then the good properties can kind of pick up a failing property, if you like. So you can average those considerations over the year. As always, it's always good to get relevant professional advice if you're looking at this kind of strategy. So obviously, myself as a mortgage broker, I'll be specialising in looking at which lenders would be right for you and the tax strategy that you have in place or that you plan to put into place. So part of that process will be understanding from your tax advisor what your strategy will be. Will you be owning this in personal names, or will you be seeking to set up a limited company, for example? You'll get that advice. And not all accountants are tax specialists, by the way. So you may have an accountant already, but they may not be the best person to speak to around tax. So do seek out a tax specialist accountant. Financial advisor may be required if you have planning around the earnings, what you want to do with those profits, particularly if you're looking to put that inside of a pension wrapper. Then also you need the right advice there. Solicitor for the conveyancing of buying that property. Obviously, surveyors to make sure that the property is in the right condition. That's not going to give you any hidden problems, particularly if you're looking at older cottages and listed buildings, more likely to have obviously property defects that you'll want to be aware of. And then a letting manager in this arena is always particularly advised, and it wants to be a specialist holiday letting manager, because it's a different ball game. It's a different ball game to the standard let, and you'll probably find your holiday property is not in the same town as you, so you want to make sure it's someone who's professional and who's going to do the right job for you. So that's the kind of considerations. That's a kind of overview of how it all works. I'll personally not kind of put any figures on here because it all kind of depends on your strategy and do you already own property? How many properties do you own? So rather than kind of just hashing together details, it's better to look at each person's particular situation and look at a bespoke solution for that person. But hopefully that's given you a flavour, at least an overview of how furnished holiday lets work and some of the advantages and some of the considerations. So just at this stage, I'd like to invite any questions and or any kind of feedback you have for me.
And John, we're going to turn over the next part of the session to just asking you questions about the market. So, I mean, in essence, a question from me to start off with is, what's the COVID situation done in terms of people buying houses?
Well, I mean, I spoke a little bit about this initially, but yeah, it slowed it down to begin with as we adjusted to, I think, what is becoming, and I hate the phrase, but I can't think of a better one at the moment, which is the new normal, of course, that we're going to try and work as more remote and have as least contact as possible. So for the early stages, we were finding everything was grinding to a halt, mainly because property couldn't be assessed from a valuation or surveying point of view. And obviously without a survey or valuation, a lender's not going to lend anybody any money. So they took a drastic look, mainly in industry, of how far they'll be prepared to go up in terms of loan to value for automatic models or desktop valuations. Basically what we mean there is, those valuations that don't need a physical presence. You don't actually need to see the property. You can just do it from your workstation, or the computer can do it for you under an automatic value model based on house index prices in that particular postcode, based on that particular type of property. And we're finding that lenders are prepared to do that mainly up to 85% loan to value. So that cut out a lot of valuations and a lot of need to knock on doors, and that helped. We started moving again, and we started to see some more people started to buy properties. We talked a little bit about that phenomenon of where people are starting to work from home more, and therefore they want a bit more of their own space, so that they're looking to find their own place now. Perhaps you had people living together and now kind of separating out into different households. So we're seeing a lot of that now. So that kind of gave the market a little bit of buoyancy during the summer, and then obviously the Chancellor announced that he was going to freeze stamp duty, and that really got people excited. And that's going to last until March 2021. So people are still got that in the back of their minds when they're looking at buying properties. So we're finding actually quite a buoyant market, which is also stark contrast to some other industries. But yeah, in the housing industry and the mortgage and related fields, still very, very buoyant. And I've been very busy over the summer. So yeah, ultimately I can't complain. It's the message there. And it's just started to get to the point where I was probably working too much almost. I was keeping on top of it, but it was starting to pile up a little bit. But now I'm more of an even keel, where it's a bit more of a constant flow rather than an absolute deluge. So yeah, I'm happy with how it's going, and the market seems for the moment, touch wood, to be okay.
Are there areas of the country where it's more active than others?
Um, it's not really one that I can answer that well, because I only sort of focus on particular areas of the country, and I think the home counties are always an active area when it comes to the housing market. So yeah, for me, I've noticed it really buoyant, but we might find there's areas around the country, particularly those areas that have been hit with tougher restrictions, may find it tougher. I know Wales were going for a time of it, and also sort of further north as well, in those areas, when Leicester was on lockdown, and Manchester, etc. So that you find that any of those places that has those really tough penalties and restrictions imposed, then yeah, we might find a local slowdown. But I can't say it's affected me personally, because I'm operating mainly in East Anglia, and we've been okay, touch wood, so far.
Excellent.
Have you done much with equity release this year, John?
Not so. I've not had that many inquiries. I was expecting more, to be fair. I mean, I'm not expecting more this year, but I actually really anticipate a bit more next year. I think that's when the crunch is going to bite home. Sadly, I think next year, or sort of maybe quarter two, around that sort of time next year, I think that's when, if unemployment hits, that's when it's going to hit. I've been speaking to one gentleman who's basically been in that situation because of COVID. He's a long time mechanic working in a garage. He's no longer working there, been made redundant. He's in advanced years, and he's looking at doing an equity release. So I've done one case like that, but I was expecting a few more. But I really think the bite will be put on next year, and I'll be expecting to see those again who are asset rich, income poor. That they're advanced in years, maybe paid off or got a small mortgage, and they're looking at a way of maybe consolidating their other debt so that their pension goes further, that kind of thing. I can see a lot more of that happening in 2021. Any other questions?
Yeah, I've got one quick one.
Okay.
You mentioned that holiday lets, you don't pay council tax, but you do pay business rates.
Yeah.
It obviously depends on the size and what have you, but would that be subject to small business rate relief in the same way that a shop would be?
Yeah, exactly. Because it's treated as a trading company, you'd be subject to the same sort of release as you would be if it was a shop, for example.
Yeah.
It's treated in the same way. Obviously, this is where you need to be speaking to a suitably qualified tax specialist to go through all these aspects. Exactly what you can claim back, and exactly what your strategy should be. But yeah, but certainly anything that would apply to a small business, you could claim that back in the same vein. So yeah, it's an interesting little niche now, the furnished holiday letting market. It's as I say, it's one that people are waking up to. One that people are starting to look at, and I think the main draw is that the standard buy-to-let market is becoming so heavily regulated, so heavily taxed. Everywhere you turn, there seems to be a new requirement, a new rule that you've got to follow. And so people are sort of looking at maybe an investment opportunity that's less punitive than just owning standard property, and I think certainly for the moment that the holiday lets offer that. And it's almost, you get a best of both worlds, because you get an investment property that you can also go and use yourself. I think that's why it's got a lot of draw. Not everybody wants to do that. Not everybody wants to go on holiday to that second property, but for many people that's a really attractive draw, that you can do that. It's obviously something you can't do with standard lets, but yeah, it's something we're starting to see a lot more inquiries for. So yeah, I just wanted to make sure guys in my network understand it, and if it's something of interest, of course, do let me know. We'll maybe do a one-to-one, and we'll talk about it in a lot more detail. You can always contact me after. But
just a thought, John. Would it worth you and Leslie having a conversation? I'm just thinking. I know you mentioned it's sort of the safety net of actually buying abroad is not necessarily there at the moment, but in the long term, they're going to reopen up the borders and all that kind of thing, because they can't keep them closed. But with everything that's going on in the world, there's some really good deals on currency at the moment. So if you were able to release equity in the pound and turn it into foreign currency, you could potentially get a lot more property
Mm.
abroad than what you could here, because property here is more expensive in the areas where you would want to have a holiday let, whereas you could get an estate in France for next to nothing, and potentially release even more money by just doing a transaction in the euro. That's my 2 cents for Leslie.
Dan, you've been listening to me. You're a good student. I love it. He's learned so many tricks working with me. It's amazing. But legal tricks, I have to say.
Yeah, of course. Yeah. But no, that's what I mean. Yeah, you can take advantage of the sort of gearing and good rates and that kind of stuff to make your investments, of course. But if it's coming to sort of overseas investment, just as a kind of disclaimer, really, whilst I can certainly look at the remortgage of the UK property that's going to fund that property, if you need then a mortgage for the piece that's abroad, whether it be France or Spain or wherever it is you're going, then you would need to speak to a specialist overseas mortgage broker to handle that part. I can only do regulated mortgages within the UK. I can't expand myself into foreign country, and that includes Ireland as well. Funny enough, but we can't do Republic of Ireland. So, but I do have contacts in that sphere. So, if that is the sort of arrangement that you're looking at, and that's something you want to take advantage of, then I can guide you in the right way, and certainly I can handle the first transaction for you as well. But no, it may be worth exploring then, Leslie, ways that we could work together on that, and see if that could be a mutual benefit for each other.
Definitely. Dan pimps me out. It's perfect.
He's obviously ashamed of himself because he's gone on to mute and hidden himself. So yeah,
So,
he's gone.
John,
Dan, where are you?
John, what's the sort of things that we should be keeping our eyes and ears open for to find a client for you?
Yeah, so I suppose the conversation might start around people with they've got some money, or they've got some spare income, or they've got a property that has some equity in there, and they're talking about. Usually, it's when people start to think about their retirement. Not everybody wants to invest that into kind of a pension pot. Some people feel more comfortable with bricks and mortar being the vehicle of investment. So it generally tends to be people in their kind of 40s and beyond that tend to be interested in this type of stuff. And they do get some young guns as well, of course. But they're looking towards the future. They're looking at how they can build their their property portfolio ready to give themselves a retirement income. So those would be the kind of people that I'll be interested in speaking to mainly, and would explore what their situation is. Have they got some funds set aside already, or have they got equity in their property they're looking to release? We'll look at ways we can do that for them and help them achieve that dream of having a property portfolio that then sort of returns the kind of income they're looking for. And indeed, being holiday let, there is, in the right area, there's potential for a property to outstrip what you would get as a standard let. It can be quite lucrative if you do it right, if you manage it well. But obviously, you need to get it rolling first. You need to build up a bit of a reputation as a good space. You have to get the right rankings on Airbnb and that kind of stuff. But no, it's certainly a very good opportunity for people.